The year is 2025. The world of finance is undergoing a dramatic transformation. Traditional investment vehicles are being challenged by the emergence of new digital assets. Cryptocurrencies, NFTs, and REITs are at the forefront of this revolution, offering investors unprecedented opportunities for growth and diversification. These innovative asset classes have captured the attention of seasoned investors and newcomers alike. They promise to reshape the financial landscape as we know it. This new era of investment is not without its risks. The volatility of cryptocurrency markets is well documented. The NFT space is still in its infancy. The regulatory landscape for these assets remains uncertain. However, the potential rewards are too significant to ignore. This essay will explore the investment potential of cryptocurrencies, NFTs, and REITs in 2025, providing a balanced perspective on the opportunities and risks they present. Whether you are an experienced investor or just starting, understanding these emerging asset classes is crucial for navigating the exciting world of finance in the years to come. Bitcoin, the first and most well-known cryptocurrency, has come a long way since its inception. Once relegated to the fringes of the financial system, Bitcoin has gained mainstream acceptance. This is due in part to the introduction of spot Bitcoin ETFs. These ETFs have made it easier for institutional investors to gain exposure to Bitcoin. The year 2024 saw the latest Bitcoin halving event. This event, which occurs approximately every 4 years, reduces the rate at which new Bitcoins are created. This reduction in supply has historically led to price appreciation. Some analysts believe that Bitcoin could reach $200,000 or even $250,000 by the end of 2025. However, investing in Bitcoin is not without its risks. The cryptocurrency market is notoriously volatile. Prices can fluctuate wildly in short periods. Additionally, the regulatory landscape for cryptocurrencies is still evolving. Governments around the world are grappling with how to regulate these new assets. These regulations could impact the price of Bitcoin and other cryptocurrencies. Non-fungible tokens, or NFTs, have exploded in popularity. These unique digital assets represent ownership of digital or physical items. NFTs first gained attention as collectibles. Now they are being used for a wide range of applications. These include real estate, gaming, and art. One of the most exciting trends in the NFT space is the development of real-world asset tokenization. This allows physical assets, such as real estate or art, to be represented as NFTs. This has the potential to revolutionize the way we invest in and trade these assets. Despite the hype, it is important to remember that the NFT market is still in its early stages. There are challenges that need to be addressed. These include regulatory uncertainty, environmental concerns related to the energy consumption of some blockchain technologies, and the need for improved user experience. Real estate investment trusts, or REITs, offer investors a way to invest in real estate without owning property directly. REITs are companies that own and operate income-producing real estate. They are legally required to distribute a significant portion of their taxable income to shareholders as dividends. This makes them an attractive option for investors seeking passive income. REITs offer several advantages over direct real estate investments. They are highly liquid, meaning investors can easily buy and sell shares. They also provide diversification benefits. This is because REITs typically invest in a variety of properties. However, it is important to note that REIT prices can be affected by interest rate changes. When interest rates rise, REIT prices tend to fall. This is because investors demand higher returns from REITs when interest rates are higher. Section 5, Balancing Risks and Rewards, a guide for investors. Investing in cryptocurrencies, NFTs, and REITs can be a rollercoaster ride. It is important to approach these investments with a balanced perspective. Understand the potential rewards and the inherent risks. Here are some key considerations for investors. Risk tolerance. Determine your risk tolerance. How much volatility are you comfortable with? Cryptocurrencies are generally considered high-risk investments. NFTs are even more so. REITs fall somewhere in between. Investment goals. What are your investment goals? Are you looking for short-term gains or long-term growth? Your investment goals will influence the types of assets you choose to invest in. Due diligence: conduct thorough research before investing in any asset. Understand the technology, the team behind the project, and the potential risks involved. It's crucial to remember that past performance is not indicative of future results. The value of your investments can go down as well as up. Never invest more than you can afford to lose. Section 6. The regulatory landscape shaping the future of investments. The regulatory landscape for cryptocurrencies, NFTs, and REITs is constantly evolving. Governments around the world are working to develop frameworks. These frameworks will govern the use and trading of these assets. The lack of clear regulation is a significant risk factor for investors. Regulatory changes could impact the value of these assets. Investors need to stay informed about the latest developments in this area. Despite the uncertainties, there is a growing consensus among regulators that these new asset classes are here to stay. The challenge is to create a regulatory environment that fosters innovation. This environment must protect investors. Section 7. The Metaverse and Beyond: Emerging Trends in 2025. The year 2025 is witnessing the metaverse take shape. This immersive digital world is creating new investment opportunities. Virtual real estate, digital fashion, and in-game items are just a few examples of assets that are gaining value in the metaverse. The metaverse is still in its early stages of development. However, it has the potential to become a significant driver of growth for cryptocurrencies and NFTs. Investors who are willing to embrace this new frontier could reap substantial rewards. Beyond the metaverse, other emerging trends are shaping the investment landscape. These include the growing adoption of blockchain technology by businesses and governments. Decentralized finance, or DeFi, is offering new ways to borrow, lend, and invest. Investors need to stay ahead of the curve to capitalize on these trends. Section 8. Diversification and portfolio allocation in the digital age. The rise of cryptocurrencies, NFTs, and REITs has made diversification more important than ever. Investors should not put all their eggs in one basket. They should spread their investments across different asset classes. There is no one-size-fits-all approach to portfolio allocation. The optimal mix of assets will vary depending on an individual's risk tolerance, investment goals, and time horizon. Investors should consult with a qualified financial advisor to determine the best portfolio allocation strategy for their needs. A well-diversified portfolio can help investors weather market volatility and achieve their financial goals. Section 9. Conclusion: Embracing the future of finance. The world of finance is changing at an unprecedented pace. Cryptocurrencies, NFTs, and REITs are at the forefront of this revolution. They offer investors exciting new opportunities for growth and diversification. These emerging asset classes are not without their risks. However, the potential rewards are too great to ignore. Investors need to approach these investments with a balanced perspective. Conduct thorough research, understand the risks, and never invest more than they can afford to lose. The future of finance is here. Those who embrace it are well positioned to benefit from the transformative changes taking place. Subscribe to Vista Edge Dynamics for more insights and updates on the ever-evolving world of alternative investments.